The following was recorded in front of a live studio audience at the Studio 21 Podcast Cafe. This is the United Podcast Network.
Welcome to Easy Money New England.
Oh, can somebody help us here?
We can, because we are real estate and mortgage professionals.
Here you go. Just come in and browse.
That's right. Come on in, listen up, and learn.
How long do you intend to browse?
In a short period of time, our panel will teach you some tricks that might make your house buying easier.
You don't ask her how long she intends to browse.
You might not be looking for a mortgage today, but we'll get you ready.
You don't look like browsers.
Are you looking?
Oh, what do browsers look like?
Yeah, maybe I'm half browse.
On his father's side.
This is Easy Money New England
Let's show the lady we're browse.
with your host, Brian
Hey,
D'Amico.
look at us, we're browse. One more word out of you and he gets it, all right? Come on.
Hello, and thank you for tuning in to another edition of Easy Money New England, where every week we bring you money making ideas or money saving opportunities. And this week, I'm very excited to be bringing Harj Gill to the show. Now, Harj is actually Skyping in from Seattle, Washington, and Harj is an international mortgage reduction expert. He's written a book, Own Your Home Years Sooner, without making extra interest payments. Now, I've been using the system for quite some time now, and it's been showing me great results. And because I own a mortgage company, it's been very, very exciting for me to because we do so many mortgages that I now have a system that I could show my customers of how they can slash years off their mortgage. And without further ado, Harj, welcome to the show.
Thanks for having me, Brian.
So, Harj, we're going to get right down to it, and we're going to see, what is the speed equity system?
Brian, at its core, it's about paying the least amount of interest on you by making the banking system work for you instead of against you, because that's the way it's currently set up. Now, before we continue, what I'd like to tell the audience is what this is not about. It's not about any of the traditional outdated methods of loan reduction familiar to most people. That's increasing your monthly payments, making lump sum payments, or even using the bi-weekly repayment method. This is a completely revolutionary system that helps you work smarter with the money that you already have to slash years off your 30-year mortgage and save tens, if not hundreds of thousands of dollars in interest.
Okay, so that's what it's not. But if we flip it around, what actually is the speed equity system?
It's about taking, it's about understanding and taking full mathematical advantage of what I call a key banking principle. That is, the interest on your mortgage is calculated on the daily balance. That's the discovery I made in 1995. And as I said earlier, with the speed equity system, it's working smarter with your existing financial resources. So if you think about a traditional mortgage, that is a closed amortization schedule. By that I mean you make your monthly mortgage payments, and a large chunk of that disappears on interest, and only a very small portion actually goes toward reducing the loan balance itself. That then gives you a new daily balance that stays the same for the entire month until you make your next mortgage payment. And that cycle continues for the next 30 years. You make your mortgage payment, large chunk of it disappears on interest, and only a very small portion goes toward reducing the loan balance. Now, what you have, and what most people have, is money that comes into their checking account through their direct deposit pay, or they've got any surplus funds sitting in their checking account. Right now, that does nothing for you. In fact, it's quite detrimental. You're earning nothing, and if you're lucky to earn 0.25% in interest, then you have to report that to the IRS and you get taxed on it. So if there was a way to funnel that money, your cash flow, your existing financial resources, through your mortgage to reduce the daily balance, pay less interest, that's the heart of the system. So that's what I discovered in 1995, is to how to use the banking system. And basically it boils down to math. The savings end up being pennies per day, but it's those pennies, save pennies each day, that add up to hundreds of thousands of dollars in interest over a 30-year loan period.
Now, Haj, you just mentioned that you've learned this banking principle back in 1995. Can you tell us kind of, when you did learn about this banking principle? You started it in Australia, and it's very common over there.
Absolutely. In fact, if you go down under and you start talking about this concept of paying off your mortgage quicker and funneling your cash flow through your mortgage instead of having it sitting in your checking account, people look at you and as if to say, "What are you talking about? Why aren't you doing it? Everybody in this country does it." So I discovered this key banking principle through my work as an organizational consultant. That's what I'm academically trained to do. So as I was doing research into the banking industry, it was really, I've got a curious mind, and so I'm going, okay, wait a minute. So if interest is calculated on the daily balance, and then how could people reduce that daily balance outside of the closed loop amortization schedules? For example, you take out a 30-year mortgage, you kind of sentence for the next 30 years with these monthly payments. But if you could use your existing cash flow, that's when the ball really started. I started uh, doing the calculations, and when I discovered the impact of those little pennies, now you know, as we were growing up, you've heard people say, uh, uh, apparently Einstein said it, the compound interest is the eighth wonder of the world. Those who understand it will become rich, and those who don't will become enslaved to it. And
Yeah.
but when you actually start to do the calculations on a normal mortgage, you understand really what the impact of those little pennies add up to over 30 years. And I started to share that with all my family and friends because I was so excited about this discovery. And the next thing you know, I'm this mortgage reduction specialist that everyone's coming to saying, "Hey, can you help me pay off my mortgage?" So that's kind of how it started.
Right. So I remember having the one-on-one consultation with you, and when I'm following your system, and you know, when I started talking to you years ago, I never really took you up on the one-on-one. I took you up on the one-on-one recently, and it's been instrumental. And the question that I had when I talked to you first is, how much am I going to save? So you must get that question a lot. How much can I save, or how many years off my mortgage can I save if I take a simple process that you're going to teach me through your book, or through your one-on-one coaching, or through your software program? How do you know what someone's going to save?
Yeah, and that's a really great question, and it's the number one question that I always get asked, whether I'm being interviewed on radio, television, I'm on stage talking to investors or real estate agents. How much am I going to save? Because that's what everybody wants to know, and bring it to a personal level. Now, the wrong answer to that is to make a concrete statement and say you're going to pay off your mortgage in 5 to 7 years. Now, that's what all of my imitators in this country uh, do in their marketing campaigns. And I got to tell you, that's a complete false and misleading statement, because there are three factors that will determine how much time and interest people save using the system. And those three factors are unique to every single person listening into this podcast today.
So, Haj, what are those three factors?
Okay, so everybody listening here today, the three factors that are unique to you is the size of your debt load. So that's your car loan, your student loan, including your mortgage. That's unique to you. Your income is unique to you, and your living expenses are also unique to you. So the combination of these three variables will determine how much time and interest you save using the speed equity system. What I can tell you, based on the data that we've gathered for the past 12 years, people using this system in the United States, the average time saving is 16 years, 2 months, and the average interest saving is $109,293. But as I said, the results are unique to each individual based on those three variables. And the only way to find that out is to put your information into the software program.
So the software program, how does that work? So if someone was to go to speedequity.com, and they pick your book, or they pick your system, how do they get access to the software system?
Sure. If we can take a step back, one, Brian, I call it a system because it's like McDonald's. right? So if you order a Big Mac here in Seattle, Washington, or you go to Sydney, Australia, and you order a Big Mac, and a Big Mac is going to taste like a Big Mac regardless of where you order it in the world. Why? Because McDonald's has a system. They have a very set process to to produce a homogeneous product. So in the same way, I have a scientific background, so in following scientific procedures is really important to me. And so when I created this as a system, it was specifically designed as a do-it-yourself system so that people, when they follow these steps in the sequence that I've laid them down, I've seen everybody achieve success. Now, people who don't follow these steps, that's when the wheels come off the cart. So the 3 steps in my system are, first of all, to learn how the concept works, because it's very different to what most people are used to. And so the first part is education. Now, the second part is to create your plan. And that's where the software program comes in. And it's designed to help you calculate exactly how much time and interest you could save using the speed equity system. Number 2, it acts as a financial GPS system. So once you find out how much time and interest you can save. By the way, one of the factors that we've got built in is the ability to do what if scenarios. So once you input your initial information, you can start to just change for example, the injections that you make from the home equity line of credit into your normal principal interest mortgage. And just by manipulating a couple of variables, we've seen people save thousands and thousands of dollars in extra interest. So that's what I call empowering you to take total control of your mortgage rather than being enslaved to the bank. So first, it helps you to maximize the key banking principle to save the most amount of time and interest on your mortgage. Second, it acts as a financial GPS that tells you where you should be each and every single month, so you stay on course to actually own your home years sooner. And finally, I tell you, I call it the stuff of nightmares, because once you see how much time and interest you can save, you stay up at night wondering, why am I paying so much interest to my bank? Because I no longer have to, because now the numbers the numbers don't lie. They're right there in front of you, and it's your choice now whether you want to continue to be enslaved to a 30-year amortization schedule, or you want to take the leap and take control and pay off your mortgage years sooner.
Right. I mean, I've been a student. I went through those 3 steps, and I can see for myself that if I stay course, and it's not budgeting more. It's not. I want to stress that it's not extra payments. It's just nothing changes to your system. It's just a different way by the banking principle, and that banking principle is that average daily balance. Can you explain that banking principle one more time?
Sure. So the key banking principle is that the interest on your mortgage is calculated on the daily balance. And the idea is to use your existing financial resources, the money that's sitting in your checking account right now, to funnel that through your mortgage to keep the daily balance low and therefore pay less interest. And that interest saving goes toward actually reducing the principal of your mortgage. So combine that with any surplus funds that you have. That's what really compounds this process to literally slash years and years off your home loan and save tens, if not hundreds of thousands of dollars in interest. Brian, I would like to mention there was a study done by the University of Bristol in England, a global research study on the financial literacy and capability of adults. And what they found was that financial literacy is not enough to help people take control of their personal financial lives. They said financial tools play a critical role to make that happen. And so that's the reason that I developed the software simultaneously to when I wrote the book in 1996, because I knew if I just wrote the book, people would go, that sounds like an interesting concept, but I'm not sure if it's going to work for me. So what the software does is it brings to life the concept in the book. So now those numbers that were hypothetical and just conjecture, now it's like you've got the book in front of you, but you're seeing your numbers. And the power of the software is what I call the time value of money. See, we're not taught this information in school. None of us were. We still continue not to teach any of this information. This financial literacy. There's only 11 states in America right now that teach financial literacy to students, high school students, and they do an abysmal job of making that happen. But if you are empowered with a tool that lets you see what is the time value of your money, let me give you an example of that. I had one client that he was spending $20 a day on Starbucks. Before work, him and his wife, $5 each, that's $10. On the way back from work, that's another $10. So that's $100 a week. And then on Sundays, the whole family got Starbucks. It's $120 a week. 52 weeks a year, that's over $6,000. But he really didn't pay any attention to that until he input that into the software. And he goes, oh my gosh, I can't believe we're spending $6,000 a year on Starbucks, right?
Yeah.
But that's what we all do. We just run on autopilot. And the system is designed to do that, is to keep your attention away from these little expenses that you've got. So I said to him, Jack, I know you like your coffee. He goes, we've been looking at this $4,000 DeLonghi space shuttle coffee maker, and we always thought that it was too much money to spend. And so we put that into the software and went, what if we stopped spending $120 a week on Starbucks, bought this $4,000 space shuttle DeLonghi coffee maker machine, which they always wanted, and then so that was their first year's expense plus another $1,000 for coffee. So that's $5,000. So out of the gate, the first year they saved $1,000, and then every year thereafter, it was just the product cost. Which I said, look, Jack, let's assume you're drinking coffee all the time. You stop drinking water. $2,000 worth of coffee beans, and so that $4,000 a year in savings could now be applied toward the mortgage. And he's slashing another 7 years and another $25,000 in interest. So now you can directly see the choices that you're making in life, the impact that would have on the time and interest savings on your mortgage. So unlike most financial software programs, which are projecting 20, 30 years into the future, and you go, well, if I start putting $20 aside now, I might have 50 I don't know, $50 by the time I retire at my age. This actually brings to life something that's really important to people, and that is to own their homes. And it directly correlates the decisions you're making financially now with the time and interest savings you could achieve with your mortgage.
That's fascinating. I mean, Haj, you also had another story where someone retired 5 years sooner than what he was expecting to retire, and he became the godfather of their children. I mean, that's how powerful your system became to this family, right?
Well, do you want to hear that story?
Yeah, I definitely want to hear that story. I thought that was fascinating.
Well, look, I got to tell you, the speed equity system has been more of a gift to me than I think the people using it, because one, it transforms people's lives. Everybody listening here today, they have goals and aspirations and dreams that when you listen to people, I mean, that's what life is about. It's not going to work every day and then, hoping for Sunday and you can have a barbecue. It's things that are sacred to you. Do you have a cause that you want to contribute more money to? Do you want to take time off work and spend more time with your family and friends? That's what life is about. So once you drill those things down, then it's a matter of how can I achieve those life goals. So I had this client in 2007. They started. They're both school teachers, and it was only the guy that I would speak to in the beginning, because his wife thought that it was a total scam,
Right.
and so we get them going on the program. 3 months, she's giving me a really hard time. Here we go. Steve, you're going off on these harebrained ideas again, and so it takes 3 months for people to use the system, especially the software program, because it projects where you should be. It forecasts where you should be with your loan balances. So the first month you go, well, am I really going to achieve this? It might be a fluke. And then the second month you achieve the forecast in the software. And by the third month, you look at the results and you go, oh my gosh, this thing is predicted every single month where I should be. And therefore, the results it's showing me are also going to be achievable. So this couple, ordinary run of the folk, hardworking, salt of the earth, both school teachers, and their dream was to retire earlier than what they had anticipated. So they used the system and they ended up retiring 5 years earlier than what they had expected. So Steve used to joke with me and say, if this really, really works, I'm going to take your daughter and you. We're gonna fly you into Mexico and have a wonderful time with our family. And I'm going, yeah, sure. Uh, but in 2014, I get this email, and it was via the contact form on the website, and I'm going, okay, and it said, I don't have it in front of me right now, but it said basically, hey, it's Steve from Colorado. We used your system. We paid off our mortgage. We've now retired 5 years early, and we want to keep our end of the bargain. Jackie and I would like to invite you and your daughter to spend a week with us at this 5-star luxury resort in Mexico, in Puerto Vallarta. And there's a link to the website of the hotel, and I click on it, and I'm going, it's got to be one of those phishing scams, right?
Right.
And so I went, all right, I'll give this guy a call. So I called him up, and he goes, Steve from Colorado. And I went, Steve? Oh, Steve, yeah, okay. So anyway, they paid us they flew me and my daughter, who's the light of my life,
Yeah.
2015 January. And, and the first thing that the Jacqueline said to my daughter was, it's because of your daddy that you're here, because he helped us to retire early, and we're living the life that we want to live. And that night, Brian, it almost made me cry. My daughter, I mean, she was, 2 years ago, she was 9 years old, 8.5. And she says to me, Daddy, I know what you do. You help people. And I went, that's what life is about. And we got along. I'd never met these people in my life, right? And so Jackie said to me, she confided in me, she goes, I'm thinking, Steve's totally lost his mind now. Who's this guy? I know we use this system to pay off our mortgage, but to invite him over and spend time with us, how's it going to? What if we don't like him? So we got along so well, and they are now my immediate family in the United States. So they love my daughter. My daughter loves them, and they became godparents to my daughter. So that was the gift that I got.
Yeah,
out of
that's an amazing story, and that's I wanted you to bring it up because that's such an amazing story. I mean, you brought this to Australia, and I honestly feel like that might be one of the reasons why they say Australia is the happiest country around. Because they're not enslaved to this 30-year mortgage. It's a rat race, and everyone's paying off their mortgage. But in that first 5 years, there's really no principal balance getting paid down, and as long as you keep going the same way as it's set up in the United States, nothing's going to change. And I know that but by following your system, you'd rather be helping families than being a corporate person trying to make more profit.
Yeah, and I think that's what we all want to do in life, Brian, is to find a purpose that makes us happy. And the greatest purpose that one can find is doing something that makes you happy, but also contributes to other people's lives. And like I said, everybody has dreams and aspirations. And people, if I can just digress a little bit, people sometimes say to me, "Oh, you must hate the banks," and I say, "No, I don't. I've lived in countries where you don't have access to credit, and the and when you don't have access to credit, it's really a tough road to travel, because when you go to these other countries, especially second and third world countries, you don't have the opportunity to build a life. You don't have the opportunity to build a future. So when when people take on credit in those countries, they use it not to consume for immediate gratification. They use credit to build a little micro business, to help their children get education. Um, Whereas in the West, it's a choice. Ultimately, it's our choice whether we want to follow that path or not. But when you look at the way credit is offered in this country, it's, hey, it's time to buy a new car. It's go on a holiday. It's, spend, spend, spend on just trivial stuff that doesn't make you happy. What makes us happy are life experiences. So, no, I don't hate the banks. I love the banks. I would love to work with the banks like I did in Australia and say, listen, work with us. Help, help. I'll help you develop these loan products. And if you do that, you're going to get more customers than you can poke a stick at. And I know you're going to ask the next. You want me to ask this?
Go ahead. You can do it.
Your mouth,
Yeah.
uh, uh, and and then the next question out of that is, well, aren't the banks going to lose out? And I
Right.
say, yes, in the short term they will. And I've had plenty of conversations with CEOs with major banks, and they immediately freak out because they think, oh my gosh, what am I going to tell my shareholders that we're going to lose our profits in the next quarter? And I say to them, yes, you will. In the short term, you will. But ultimately, what the speed equity system does is it takes ordinary mums and dads and it turns them into what I call blue chip clients. And that is someone that knows how to take on debt. Like, look at how many people that you've originated mortgages for. And the initial euphoria of, great, I bought my house and I've, got into this living space, this shelter that I always wanted in my life. That euphoria lasts for about 5 months after you've settled in. And then all of a sudden, you get this monthly headache in the mail that tells you how little progress you've made on your mortgage. And it's heartbreaking because you go, oh my gosh, it's buyer's remorse, right? That mortgage, it's a death pledge. That's what it means. It's
I mean,
almost
that bill's coming every month if you want it or not.
right.
Yep.
And you've got no choice but to pay it. And so, um, but if you have that debt, yeah, great, you've got the house because that's where your family's dreams are going to be created and shared, and memories, the priceless memories. But if you could own it years sooner, look at how much more freedom that you have for you and your family. That's what, I say to people, this is not about mortgages. This is not about money. It's about what you want to do with your life. And
Right.
so with the banks, um, yeah, in the short term, they'll lose money. But imagine if you got this blue chip client who knows how to take on debt, how to manage it, how to pay it down. And then people do one of two things. They either buy up or they buy an investment property. And if you service them well, then they're going to stay with you for the rest of their lives, and they're going to bring all their family and friends over as well. So I've yet to see a major lender in the United States have that vision and come and work with me, and the doors are always open.
Yeah, no, that's remarkable because I mean there are banks out there that have the banking products, which is step 3 of your system to make sure that you get the right banking products to be able to do this, to get the right HELOC, and the timing of this couldn't be better because of the equity position that people are in the United States currently. Is that correct?
Absolutely, yeah. In fact, you know, Brian, when we were supposed to do like a filming of like a documentary about this program way back in 2009, if you remember.
I remember
It was
that,
in
yes, very
2000,
well.
right? 2008. You contacted me, and we were all excited, and I'm going, wow, this guy really gets it. And you're one of the few people that sort of said, hey, let's bring this to the American public. And that was I think it was in October or September of 2008 that you contacted me. And
Tough
then in
times.
December of, pardon me?
I said those were some tough times.
It was, right?
Yeah.
And then the wheels started to come off in the housing crisis in December of 2008. And I remember having to call you up in February of 2009 saying, no, I'm sorry, we can't go through with it because it wasn't right to tell people about this system, and then they couldn't follow through with the last step and get the right banking product. So that situation was pervasive all the way through to September of 2016 when CoreLogic came out with a report that showed 78.6% of American households now have significant equity. That means 20% or more equity. That means now every 8 out of 10 people listening to this podcast today can use the speed equity system because now the banking products are available again.
That's great. I mean, and I remember back then, the banks put a stop to home equity lines of credit. There was no equity. If anything, they were stopping equity lines. People had open and they stopped access to using them. That's how bad it was in the end of 2008 there. And I think it was a really good story that you decided not to go forward because you knew that people wouldn't be able to complete step 3 of your system. So, one of the other things I like to bring up is, it's pretty funny that since we've been reconnected through the years, I started emailing you and looking up speed equity, and I see a lot of imitate. All of a sudden, people are following me around the internet like crazy with these different systems, and it's definitely a knockoff of yours because yours was done so long ago in Australia, and you're basically the godfather of international mortgage reduction expert. I mean, it's a title no one really knows about, but I know there's a lot of knockoffs because they follow me around the internet everywhere. Like, what's the difference between your program versus somebody else's?
Well, I created this as a do-it-yourself system, and I wanted to make it available to everybody. That's at the heart of it. That's the difference. And the way that choice came about was, so if we rewind back to 1995, I'm all excited. I'm telling everybody about this concept. And by the end of 95, I had decided I'd no longer want to be an organizational consultant, and I wanted to help people with how to pay off their mortgage. And that was really exciting, right? One-to-one, I'm seeing immediate results. People are happy. And at that time, I was charging $3,500 because I had to do all the calculations manually. So there was a lot of physical effort involved. I had to coach people and then follow them through all the way, once a week and then once a month, and then they would have continual access to me. And I was charging $3,500. And I had this one young couple came to see me because I had gotten all of their friends onto the system, and they wanted to find out if I could do the same thing for them. And so I showed them the results. They were going to save, I think, over $80,000 in interest. And then all of a sudden, they looked kind of despondent. And I asked them why, and they said, "Look, we really want to do your program, but we just can't afford $3,500." And it just crushed me, Brian, because I'm going, wait a minute. The only difference between me and all these people that I've coached is I have this knowledge, and they don't. And so how can I package this up in a way that allows people to self-educate themselves, then give them the tools to bring this knowledge to life? And then the next logical question they have is which loan products? And then we had a banking information pack to go out as well. So when I put that together, I didn't have to charge $3,500 because I got the banks to pay for it in Australia. Yeah. And so, that process, I went, no, this is wrong to keep it to myself. People don't need to pay anybody thousands of dollars when they can do it themselves. It's just follow these steps. And so what these guys are doing, I got to tell you, in a way, it's a blessing in disguise because pretty much every single person that has come on board into the Speed Equity family this year is the result of these imitators out there who get to the audience before I do, and people do get excited. Who doesn't want to pay off your mortgage year sooner? And then so they suck you in and they go, well, this thing's originated in Australia. Everybody's doing it over there. So that's how they use the historical marker of this being around for over 20 years. And then, they charge up to $5,000. And there's one guy who wants everybody to replace their mortgage with a first lien home equity line of credit. And I got to tell you, Brian, if there's one thing that we accomplished today is to tell people, do not replace your mortgage with a first lien home equity line of credit. The reason is because you'll be exposing your entire mortgage to the variable interest rate. Now, that's all well and truly great. Interest rates are still at historic lows. But if you think back to when we're about the same age, our parents were paying 18% interest back in the 80s, and that just about crushed every family who had a mortgage. So you go and replace your mortgage right now with a first lien home equity line of credit. You better pray that you're going to pay that thing off in the next 2 or 3 years, because interest rates are only going in one direction, and that's up. And so please don't replace your mortgage. You don't have to pay thousands of dollars. You can do it yourself. My website's www.speedequity.com, and you know, make go and go and do your research. Type in mortgage acceleration, pay off your mortgage in 3 to 5 years. There's plenty of imitators out there, and I guarantee you that none of them have been independently verified and reviewed by financial experts like the Speed Equity system has. It doesn't have the history, and it certainly doesn't have the intention of helping families get out of debt. In fact, you'll end up being in more debt.
Well, I mean, we're going to see a lot more of Harj Gill. I know you have a TV episode coming out. I mean, people call it an infomercial over here, but I know that you've been on a lot of TV back in Australia TV. You were also in the States. You actually did a segment on which show was it in the United States?
It was NBC Saving You Money. And the way that came about, Brian, so that was in 2007, July of 2007. So
Yeah.
remember, this is a year, truly a year before the housing crisis. Everybody was excited. People were buying investment properties left, right, and center. And at the same time, they were going, okay, here's how you can pay off your mortgage years sooner. So NBC Saving You Money, the Las Vegas affiliate, that's what the show was about, helping people, kind of like what you do with your show.
Yeah.
Show, expose different ideas and concepts. And so they went, whoa, let's do a segment on this. And I got to tell you, that was just insane. We did a 4, 5, 6, and a 10 o'clock news segment they had me on. And of course, they were kind of sound bites where I would explain the concept as much as I could in the 2 minutes that we had. And that by the end of the 10 o'clock news segment, that station had over 4,000 emails, and the phone completely rang off the hook for the whole week, the following week. And so that, I thought, was the momentum that was going to get this out into the public arena like it did in Australia. So in Australia, I got this massive break by a current affairs TV program who came in. They interviewed me, interviewed people using my system, and then they aired that on February 10th, 1997, straight after the 6 o'clock primetime news. So that took the country by storm, and I ended up going on every radio and talk show for the next 6 months. So that continuous momentum brought this into the public eye, and it created what I call the cooler, the water cooler talk, where people are standing around going, "Hey, Brian, did you see that show last night? I mean, it's a crazy guy. He's telling everybody how I could pay off your mortgage years sooner, and I don't know, it sounds like a scam, but I'm going to buy his book." And so once you get those water cooler conversations going at the workplace, that's when you start to build up momentum. And unfortunately, that segment it proved the concept that people do want to know how to pay off their mortgage years sooner. And then as we were getting ready for this next push, boom, the housing crisis started.
Right, and that's why there was no real momentum after that until today. I mean, now you're seeing it pop up again. You have your imitators out there, but I know that we're working on a marketing push and to get your message out there. I mean, we can't wait to see that happen. But one more question I have, because I've brought it up to many people, and some people say, yeah, but my mortgage, it's tax deductible. Why do I want to do this? I mean, it's all tax deductible. And, I know that might even change in the United States. So the timing on that would be, if they ever did that, it would be dramatic. But, today your mortgage is tax deductible. So how do you answer that question when people say, well, I want a mortgage because I need the deduction?
Yeah. And in fact, that was one of the first questions I had to address. So when I brought this concept from Australia to the United States, first thing I had to do was I had to make some pretty drastic changes in the way that you execute it. So remember, the key banking principle is really simple. Interest on your mortgage is calculated on the daily balance. Keep the daily balance as low as possible using your existing financial resources, and you'll pay less interest. So that's it in a nutshell. I've explained my whole book in one sentence, right? But then how do you go about executing it? And so one of the challenges was exactly that. I had a friend who I thought, I'll see if I can get him going. And so he comes back and he goes, "Well, I talked to my financial advisor, and he tells me that that's the worst thing I can do is pay off my mortgage because I'm going to lose the tax deduction." And I could not believe what I was hearing, that this financial advisor had gave this advice to my friend. And so the United States is the only country in the world that allows you to fix your interest rate for 30 years. So that's a fantastic thing, right? Because it gives you stability for the next 30 years. The other thing is that it's the only country in the world where you can claim the interest on your mortgage as tax deduction. So I had to find a way that you could implement this system without having to replace your existing 30-year mortgage, because you want to maintain that security. And second, if you refinance, it'll cost you thousands of dollars. Number two is this tax deductibility concept that everybody was so seduced by. And there's still a lot of people who think that way. So here's the way that I explain it. And in my book, I use the IRS tax schedules to make my point, not only from a philosophical standpoint, but also, here's the numbers. And the way it works out is like this. Yes, having a mortgage is better than not having a mortgage, because if you're renting, your money is just disappearing on rent. If you have a mortgage, then the interest component is tax deductible. So you're better off having a mortgage than you are simply renting. So that's great. That gives you a tax advantage and a little bit of a financial advantage. But ultimately, the question that people need to ask is having a mortgage advantageous to me from a cash flow perspective? And so when we break that down, imagine this. For every dollar in interest that you are paying to your lender, let's assume that you're in the 30-cent tax bracket. So you pay $1 in interest to your lender. The government allows you 30 cents back as a tax deduction. So you pay $1 out, and that you get 30 cents back, right? You following the logic?
Yes.
All right. So now imagine they're in the 30-cent tax bracket, but now you paid off your mortgage, and now you keep that dollar, but you have to pay 30 cents in taxes to the government instead. That means you got 70 cents in your pocket. So from a cash flow perspective, what would you rather do? Pay $1 in interest so you can claim 30 cents back as a tax deduction? Or would you rather keep that dollar and pay 30 cents in taxes, which means that ultimately you've got 70 cents in your pocket? Because if the former makes sense to you, I always joke with people, we've got a much better deal at speedequity.com, and that is send us all the dollars that you've got. We'll send you back 50 cents for every dollar.
That's better than what they get now. Yeah, no, I like the latter. I'd rather have no mortgage and keep the dollar for sure. And I think that most people driving around, or if they're listening to this in their living room or their computer, I think you would agree too. And I just want to say, Harj, it was great for you coming on the show. This was a great show, and I'm excited just to use this myself, and I'm sure a lot of our viewers or listeners will as well. But where can they? So say I'm driving around, or I'm listening to this podcast right now, and I say this sounds great. How do I get started?
So go to the website speedequity.com, www.speedequity.com. All the information you need is right there, and maybe we can put a link on with the podcast as well, Brian.
Yes, we
will.
But
it's speedequity.com.
And just to kind of sum it up, the averages that you're seeing people saving over the course of how many years back have you been using this average?
The average interest saving is $109,000 and $109,293. The average time saving is 16 years and 2 months. But like I said, the caveat is your time and interest savings will be unique to you based on the 3 factors, which is your debt load, your income, and your expenses. And the only way to find that out is to put your information into the software. If I was to say, look, you're going to pay off your mortgage in 5 to 7 years, I can tell you that's a categorical lie because I don't know.
But it has
And
happened. It's just, the averages are astounding, really.
I would rather have that in my pocket than the bank's, right?
For sure. All right, Hodge. Well, again, if you're listening out there, go to speedequity.com. Pick up Hodge's book as well. And if you have any questions or anything about it, reach out to us. You can reach out to us at info@newfed.com. And we like to say there's no such thing as easy money, but I'll tell you, today's guest is kind of changing my mind on that. Thank you, Hodge, and hope to see you soon.
Real pleasure. Thank you, Brian.
It's a new day, it's a new way. Call 877-NEW-FED-1. It's a new way.
Hi, folks. It's Brian D'Amico, owner of New Fed Mortgage, and I'm really excited to introduce Fast Track Mortgage, our new online system that gets you approved in less than 15 minutes. Whether it's a refinance or a new purchase, just go to newfed.com anytime, day or night, and click on the Fast Track Mortgage button. Fill out the form, and within 15 minutes, we'll approve your loan at the lowest rate possible. Don't waste time dealing with big banks. We're local and here to help you close your loan fast. Just go to newfed.com 24/7 and get approved in less than 15 minutes. Fast Track from New Fed Mortgage. Now that's a new way to get the loan you need fast.
877-NEW-FED-1.
Subject to credit approval, Equal Housing Lender, NMLS number 1881. Call us website for details.
877-NEW-FED-1.
The views and opinions expressed by the hosts, guests, or callers of this program do not necessarily reflect the opinions of the Studio 21 Podcast Cafe, the United Podcast Network, its partners, or affiliates.